Welcome back. Today we're talking about one of the most important and most misunderstood parts of any real estate transaction. I'm Rosi Agopian, broker with Beverly and Company Luxury Properties. We're talking about title and title insurance. Now I know what some of you might be thinking. Title insurance sounds boring. It's just another closing cost, right? Wrong. Title insurance is one of the most powerful protections a buyer can have, and skipping it or not understanding it can literally cost you everything. So, in the next few minutes, we're going to break this all the way down in plain, simple language, no confusing jargon, no legal mumbo jumbo, just the facts we need to know as buyers and sellers here in the Valley and across the Los Angeles area. Let's go. What is title? Before we can talk about title insurance, we need to understand what title actually means. In real estate, title is the legal concept of ownership. When we own a home, we hold title to that property, meaning we've got the legal right to use it, live in it, sell it, or pass it on. But here's where it gets interesting. Title isn't just a piece of paper. It's a historical record of everything that's ever happened to that property. Every owner who's ever held it, every loan that's ever been placed against it, every lien, every judgment, every easement, and every legal claim that's ever been attached to it. Think of title like a family tree for the property. It goes all the way back, sometimes hundreds of years, and every transaction, every transfer of ownership, every dispute along the way becomes part of that history. And just like a family tree, sometimes there are surprises buried in there that nobody knew about. That's exactly why we've got title insurance. What is a title search? When we enter a purchase contract on a property, one of the first things that happens in escrow is a title search. A title company goes back through the public records and traces the complete ownership history of that property, sometimes going back 50, 60, 70 years or more. They're looking for any potential problems or clouds on title. A cloud on title is anything that could create a question about who truly owns the property or whether there are any outstanding claims against it. Some of the most common things a title search uncovers include unpaid property taxes, contractor liens from work that was done but never paid for, judgments against the prior owner that were never satisfied, errors in public records like a name spelled wrong on the deed, undisclosed heirs who may have a legal claim to the property, and even forged documents from previous transactions. Now, the good news is that the vast majority of title searches come back clean. But when they don't, and this happens more often than people realize, having title insurance is what saves us. What is a title insurance? So what exactly is title insurance? Title insurance is a policy that protects us from financial loss if a problem with the title is discovered after we've purchased the property. Unlike most other types of insurance, which protect us from future events like fires, floods, or accidents, title insurance protects us from past events, things that already happened, sometimes decades before we ever came along, that could come back and threaten our ownership. Here's a real example of how this works. Let's say we buy a beautiful home in Woodland Hills. Everything looks great. Escrow closes, buyers move in. 2 years later, someone shows up claiming they're the long-lost heir of a previous owner and that the property was never legally transferred. Without title insurance, we'd be facing a very expensive legal battle, potentially losing the property we paid for. With title insurance, the title company steps in, covers the legal costs, and defends the ownership. That's the power of this coverage. And the best part, we pay for title insurance just once at the time of closing. There are no ongoing monthly premiums. It's a one-time cost that protects us for as long as we own the property. Now, lender's policy versus owner's policy. Now, there are two types of title insurance policies, and it's really important that we understand the difference between them. The first is a lender's title insurance policy. If we're financing the purchase with a mortgage, our lender will require us to purchase a lender's title insurance policy. This policy protects the lender, not us, up to the amount of the loan. So if a title problem comes up, the lender's protected. But here's the important part. We're not. The buyer is not. That's where the second type of policy comes in. An owner's title insurance policy protects us, the buyer, for the full purchase price of the home. And this is the one that's optional in California, which means many buyers skip it to save money at closing. This is one of the biggest mistakes a buyer can make. The lender's policy only covers the lender. If there's a title dispute and we don't have an owner's policy, we're on our own, paying out of pocket for legal fees and potentially losing our home. The cost of an owner's title insurance policy is typically a small fraction of the purchase price, a one-time fee paid at closing, and it protects us for as long as we own the property and even after we sell it. In my professional opinion, it's absolutely worth every penny of it. What title insurance protects against? Let's talk about what title insurance actually covers, because the list might surprise you. Title insurance protects against forged deeds or documents, meaning someone in the chain of ownership signed a document fraudulently. It protects against undisclosed or unknown heirs who may claim ownership after the sale. It covers errors and omissions in public records, simple mistakes like a clerical error that was never corrected. It protects against liens from unpaid contractors, unpaid taxes, or unpaid homeowner association dues that were attached to the property before we bought it. It covers boundary and survey disputes with neighbors. It even protects against situations where a prior owner was a minor or legally incapacitated and the sale wasn't legally valid. And in today's world, title insurance is now also beginning to offer protection against certain forms of deed fraud and wire fraud, which are unfortunately becoming more common in real estate transactions. The bottom line is this: title insurance isn't just a formality. It's a shield that protects one of the biggest investments we'll ever make. Who pays for title insurance in California? One of the most common questions I get from buyers and sellers: who pays for title insurance in California? The answer is that depends, and it can actually be negotiated as part of the purchase contract. In Southern California, including here in the San Fernando Valley and across Los Angeles, it's customary for the seller to pay for the owner's title insurance policy for the buyer. This is actually one of the benefits buyers receive as part of the transaction. The buyer is typically responsible for paying for the lender's title insurance policy if they're financing the purchase. However, these are important customs, not laws. Everything in a real estate transaction is negotiable, and who pays for what can be structured differently based on what's agreed upon in the contract. This is exactly why having an experienced agent by your side matters. Knowing what's customary, what's negotiable, and how to structure the offer and the closing costs to your advantage is part of what I do for every single client I work with. Title red flags to watch for. Before we wrap up, I want to share a few title red flags that buyers and sellers should be aware of so we know what to watch for during the transaction. The first red flag is a property with a complicated ownership history, multiple transfers in a short period of time, or properties that have gone through foreclosure, bankruptcy, or probate. These situations aren't necessarily deal breakers, but they require extra due diligence. The second red flag is any outstanding liens on the property, unpaid contractor invoices, tax liens, HOA liens, or judgment liens. These must be resolved before the title can transfer cleanly. The third red flag is an easement that was never disclosed, meaning someone's got the legal right to use a portion of the property that, like a utility company or a neighboring owner. This can affect how we use and enjoy the property. And the fourth red flag is any gap in the chain of title, meaning there's a period of time where ownership can't be clearly traced. This is something a title company will flag immediately, and it needs to be resolved before closing escrow. The good news is that a great escrow officer and title company will catch all of these issues during the title search process. And when I'm representing you, whether as a buyer or a seller, I'm watching every step of this process closely to make sure we get to closing without any surprises. And there we have it, everything we need to know about title and title insurance. I hope this video gave you a clear and simple understanding of why title matters, what title insurance actually does, and why an owner's policy is the smartest investment we can make as a home buyer. If this video was helpful, please give it a like, subscribe to the channel, and share it with anyone who's thinking about buying or selling a home. And if you're ready to make a move anywhere in the Valley or anywhere in LA, Woodland Hills, Calabasas, Encino, Sherman Oaks, Tarzana, Brentwood, West Hills, or anywhere across Los Angeles, including, of course, the West Side, I would love to be your guide. Visit me at rosieagopian.com for a free home valuation or to connect directly, or call, text 818-371-2656. Don't forget to subscribe, and I'll see you in the next one. Take care.